Transrail Lighting Q3 earnings are finally out. Here are the earnings. These are for Q3 fiscal year 26, the latest earnings. Revenue from operations rose by 32% from 1,358 crores in Q3 of fiscal year 25 to 1,796 crores in Q3 fiscal year 26. EBITDA rose by only 27%, so slightly less than revenue. EBITDA rose, very strong growth, to 27% to 228 crores in fiscal year 26 third quarter. EBITDA margin slipped a little from 13.2% to 12.7%. Operating profit rose by 34% from 126 crores to 169 crores. Tax expense rose by 26%. So overall operating profit after tax increased by 36% from 93 crores to 127 crores. Operating profit after tax margin was 7%. So revenue 32%, EBITDA 27%, profit after tax rose by 36%. However, look at this. Exceptional item came. New labor codes. So there was some impact, material impact from these new labor codes, a 17 crore impact. Because of this, the total profit after tax was actually 110 crores. So if not for this one-time exceptional item, or what they claim to be a one-time exceptional item, profit after tax would have risen by 36% to 127 crores. But because of this new labor codes impact, it became 110 crores. Okay. Then the first 9 months of fiscal year 26, what was the order inflow and the unexecuted order book? Let's go to unexecuted order book. 14,733 crores is the current orders from customers they have right now, which are unexecuted. December 25 numbers, okay? Year on year, they rose by 28% compared to December 24. That's a good growth rate. Domestic, 57% of the order book is domestic, 43% remaining international. The blue one is power trading and distribution. Yes. So 92% of the order book is related to work in the power trading and distribution sector. 5% is for civil infrastructure. Railways is a very small 2%. And poles and lighting is a very small 1%. So in the first 9 months of fiscal year 26, 5,135 crores was the inflow. Okay, it was the inflow, order intake of 5,135 crores. Again, most of them for the power trading and distribution infrastructure. But look at this total unexecuted order book of 18,216 crores as of December 31st, 2025, including L1 of 3,483 crores. So, order book right now is 14,733 crores, but they have L1 of 3,483 crores. What is L1? Basically, they have bid for projects, and in those projects, they have bid for the lowest amount, meaning they have bid that they can do the project for the client at the lowest cost to the client. Okay, these orders in which they are L1 is 3,483 crores. They have not gotten these orders yet, but L1 players or the contractors or the bidders who get L1 usually have a good chance, a very good chance of actually getting the project. Okay. Then update on capital expenditures. They're having some capital expenditures. So capital expenditures happening on towers product and conductors. Pre-capex, the tower capacity was 84,000 tons per annum. Conductors was 24,000 kilometers worth of conductors they could actually lay out. Post-capex, the capex is going to be conducted in two phases. Post-capex, tower capacity is expected to go to 1.96 lakh metric tons per annum. Massive growth. Conductor capacity is going to more than double from 24,000 to 49,500 kilometers. Okay. So, phase one in towers is going to be complete by Q4 fiscal year 26, basically March 31st fiscal year 26. So, towers 70% complete. We got, okay, phase one, both of them are going to be complete by March 2026, and phase two is going to be complete by the Q1 of fiscal year 27. So, pretty recent, all of the towers. Then, conductors, the first phase is going to be completed by Q1 fiscal year 27, second phase by Q2 fiscal year 27. So all of them are pretty recent actually. I think Q2 fiscal year 27 ends around September 2026. September of 2026. So by that date, all of the capex is supposed to be completed. Then what we have for the first 9 months of fiscal year 26, debt to equity rose to 0.39 times from 0.34 times. Okay. Net debt, that is total debt minus cash and cash equivalents, was 463 crores. Okay. Nice decline from 502 crores fiscal year 2025. And net debt to EBITDA ratio was 0.57 times, slowly and slowly decreasing. That's a good thing. Return capital employed increased to 25.2% in the first 9 months of fiscal year 26, a nice increase. Working capital days. How many days does it take to convert working capital into revenue? The lower this figure, the better is it is supposed to be for the company's cash flows. Now, these have risen to 83 days in the first 9 months of fiscal year 26 and 91 days to first, sorry, 91 days in fiscal year 25. But the company says that this increase, you can see it's blue and orange, and there's a little gray here, and you can see 74 here and 78 there. They're saying that this increase is because mainly of the IPO funds. They got the IPO funds, and the money they got in the IPO, it's included in the working capital. So it artificially increases the amount of working capital, and the number of days also increases. So if not for the IPO funds, they're saying 74 days would be working capital days in fiscal year 25, and 78 days would be in the first 9 months of fiscal year 26. So Transrail lighting, good growth, nice growth.